G'day folks, welcome back to another commodities update, and it's hit all the commodities we're looking at: platinum, copper, crude oil and iron ore have hit their support levels, and they've all bounced slightly due to a bullish divergence. Today's the 3rd of August 2024, so let's first go to the heat map. You can see there in the top left we've got the CCI 150 monthly, weekly and daily trends, and you can see they're predominantly still bearish on the weekly and turning bearish on the daily, and that's causing the monthly to also turn neutral at the moment, towards a bearish momentum, plus some of the other instruments we cover in various other videos should you wish to look at those. So first, looking at spot platinum, you can see there on the price is pretty much trending sideways. There's no CCI 150 on the monthly, so we'll consider that a neutral positioning. On the weekly, it's broken below the moving averages, giving us a bearish signal, and it's also broken below the moving averages of the price chart as well. And there's no divergence on the weekly. And on the daily, that's actually broken just above that moving average range, but it's still below the moving averages on the price chart, so a very weak bullish movement. But again, you can see there it's hit that support at 945 after breaking through that minor resistance there, or minor support at 1036 after hitting that major resistance at 1093. So if we go to the hourly chart, we've got the daily there as a reference. You would have been going short during these periods, going from about the 10th of July and stopping short positionings around the 29th. So about the 10th of July, around this period, you would have been going short. Now some of these were going sideways. I like to wait for the CCI to break either to the upside or the downside like it did here. And it's a bit hard to read sometimes, especially if you're seeing this zigzag approach. But in this case, you would have gone short and you would have had a nice couple of trades in that little positioning. Now notice here as well, we did have a bullish divergence in our last video. So what we're going to do now is it actually dropped a bit further, but the CCI kept rising, so that was still a bullish divergence to that point. And if we drop that Fibonacci down to that new low, then it's a very slight adjustment to our target area. You can see there that would have been the 23.38% level there. Just at that point there. Hit it quite easily, and it went as high as a 50% retrace level, and it bounced down from there. So again, that's our minimum retrace level, and then it had it broken above the 61%, that would have been a lot more bullish. But at this point, below the 50% and returning to the downside, the CCI is still declining. So at the moment, I wouldn't be taking any long trades until I started seeing this behave a bit more aggressively to the upside, or alternatively, if it starts breaking on the daily, if it starts breaking below the moving averages, and it may well do that in the coming hours or days, then I'd start taking short trades on the hourly. So US crude, it's showing a bearish signal at the moment, a fresh breakout on the monthly. You can see there it's also broken below on the moving averages. On the weekly, it's also bearish, and on the daily, likewise bearish. Now notice as well on the daily, it's broken initially through that minor support at 7591 and ended up stopping there at that 7245, just short of that, which was a support level we drew some time ago. At the moment, it's in that band between 8406 and 7245. So if we go to the hourly chart, again using the daily as a reference, you would have taken short trades from the 9th of July back here. You can see there some of those short trades would have been nice and effective, but also taking heed of these any divergence. And this point, we drew a bullish divergence here. At that point, it actually bounced. Now in this case, the CCI kept rising, and we would have taken it. The latest one would have been to that level. So if we move let me just try and move that Fibonacci down to that level, you can see that would have been another easy 23.38% target hit. Let's just draw a little one there. Now this is probably still in play. You can see that CCI is still higher than that CCI back there. So theoretically, that's a continuation of the downside. So theoretically, it can still be a bullish divergence. We'll take it to that level, and the price may even actually bounce off that support and come back to this level here. Let's just draw that in and see if it meets that retrace. Now that actually may touch that. You notice we've got there, let me just expand that. Notice we've got there a descending diagonal trend line. So that may coincide with that trend line there, or even that minor support if it does bounce. But that'll be our minimum retrace. before possibly taking any further downside. But again, we take it one step at a time. We can't really predict long term what it's going to do, but we just take little steps and try and take advantage of those little steps as best we can. So for high grade copper, it was bullish during those months. Now it's finally broken through into that moving average range, giving us a neutral signal. On the weekly, it's broken below the moving averages on both the price and the CCI, giving us a bearish signal. And on the daily, we did have a bearish divergence, lower highs on the CCI versus higher highs on the price, hit that resistance at 51,740, and it retraced, hit our minimum target range. And in this case, just to remind you, okay, the Fibonacci retrace, hit that 23.38% level. In this case, it broke, just bounced halfway between a 50 and a 61%, then made further declines below that 61%. So that's a very bearish outlook. But like I said, we might see a bit of a bounce in the short term before taking further downside. But at the moment, the daily is still declining, still a bearish movement. So on the intraday, on the hourly, we only take short trades primarily. So you would have taken some nice little short trades there, and that would have been the latest one there. You can see that it's currently bullish on the hourly. There's no divergence to talk of. So if that breaks below on the CCI and also the price, you take another short trade there. That's how you'd play those short positionings. No long trades on this one. So for iron ore, no CCI on the monthly. Although looking at the price chart, you can see that's at the very least neutral, if not bearish. On the weekly, it's bearish. It's broken below the moving averages of the CCI and also the price chart. No divergence to talk of. And on the daily, also, it's actually neutral at the moment. It's broken in that moving average range. It hit this minor support at 749, which we had drawn. And there is, I would probably consider that let me just draw that in. Let me just expand this first and draw in you can see there between that low and that low, and slightly, no, not really a divergence. That's actually, that low is higher than that low, and so is a CCI. So not a divergence. Sometimes you've got to look at these carefully. That would have been a divergence had that low been lower than that low. So it could still bounce, but at this point, I'm not going to consider that a divergence. So at the moment, on the daily, it's neutral. So if we go to the 1 hour chart, we don't take long or short trades until we see the daily breakout or one up or down. But at the moment, on the 1 hour chart, you can see there we've got a bullish divergence versus lower lows on the price. And it's actually bouncing from there. Now in this case, if we drew a Fibonacci from that low, typically you take it back to the recent high before that divergence started. You can see there it's already penetrated the 23.38% level. But even if we took it back to that high, it's also penetrated that 23.38% level. So let me just draw that in there. I like drawing those little rectangles as a historical fact that it's actually hit that minimum retrace. Now in this case, it could still go higher. Doesn't mean it's going to reverse down from there. Could mean at the CCI still rising, as you can see, but it's actually breaking again to the downside. So long as that CCI keeps rising, we're going to expect the price to also rise as well. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.